this rapid repatriation of gold and silver that we are seeing is suggesting a very big strategic shift. And I think that will bear true if this trend continues. And I think maybe they're going to let the prices rise. It is so far outside of anything I've ever seen in my career.
Will silver finally break out and reach new highs? And what does it mean for you? Stay tuned. This is critical. Something big is brewing in the silver market. And if you're not prepared, you could miss out on one of the biggest opportunities of 2025. Andy Schectman breaks down where silver is headed, what investors absolutely need to know, and why gold and silver repatriation is sending shockwaves through the financial system.
The deliveries, number one, the erosion of just how much is available. For example, like I mentioned, on the LBMA, they have 300 million ounce float. They're trading 2.9 billion ounces of silver per day, 3.5 times annual global mine supply. You see countries that are standing for delivery massively. Look at India. They've purchased 900 million ounces in the last 4 years. You're seeing China fly all around Latin America, in particular Peru, and buying up all the doré and concentrate. Now, they're paying double what the West will. Doré would be a bar that is crudely refined by the miners before they send it in for full refining. And concentrate is a sludge. You fill it up in a jar. And that would be the byproduct of the mining endeavors and the doré making. And anyways, all of this is being paid. They pay double what the West will. They ship it home to China and refine it there. 75% of all their silver used in industry right now is a concentrate byproduct. So that disintermediates the market. That disintermediates the ability for the world to price it, to have any idea of exactly how much they're buying. They're also the second largest producer of silver in the world. You have Russia, who's come out and publicly said we're adding it to our strategic stockpile. Governments really don't say that very often. And then there's some interesting things happening right now in SLV. So, a lot of the manipulation that people talk about is centered around GLD and SLV, where you're able to naked short a ETF, which makes no sense. But check this out. Over the last couple of weeks, the fees to borrow, if you're short and you need to borrow to go short, or borrow shares to cover whatever it is that you need to do, SLV borrowing fees have soared from 0.05% to 12% in the last couple of weeks. The shares available for borrowing have collapsed in the last 10, 20 days from 10 million shares available to only 10,000 shares available. That's a 99.9% reduction. 953 million ounces are sold short out of SLV. This is setting up for a massive short squeeze. So you get all these people that short the hell out of SLV. And now, if there's 953 million ounces sold short, I think that works. I think it's 10 ounces per share. There's not enough shares to cover that if everyone tried to cover. I just think that when you see the massive movements from London to New York, when you see these types of discrepancies in SLV, when you see the massive purchasing, and you're looking at an asset that's coming out of the ground at a ratio right now of 7-to-1, 7-to-1, meaning 7 ounces of gold for every 1 ounce of silver, was 16-to-1 for 5,000 years. It's priced at damn near 80-to-1, and the world is accumulating it. It's because of the naked shorting. It's because of what they do on the LBMA. It's because of the 2,000% rehypothecation on COMEX, where if 20 people hold a contract, one gets the silver. If he or she is lucky, the rest get cash settled. It's because of the distortions created by these Western central banks in order to support an illusion. Now, I believe silver has been suppressed largely because of the military-industrial complex. And I've talked a lot about the amount of silver used in high-tech weaponry, which ironically, over the last decade plus, has been stripped from the Silver Institute's numbers of supply-demand. But it's real, and there's lots of evidence that points to it. I would say to you that they're the reason why 8 Western banks have held the largest concentrated short position in any commodity ever traded on COMEX. Those banks have been suppressing the hell out of the price of silver to maintain the ability for the military-industrial complex to make and sell high-tech weapons. Same thing on LBMA. It's the same banks. They're stupid enough to think that this game could go on forever. What is changing is that the countries, stop it. Sorry, I got to put her down now. She's starting to bother me. that the countries that are doing this are sophisticated, that being the BRICS nations. They're coordinated, they're motivated, they're wealthy enough, they see what we're doing, and they're using it against us. See, this is where I think maybe the new administration understands that they cannot suppress the price of metals because it falls right into the hands of the countries that are de-dollarizing and taking gold over treasuries and dollars, and that's what they're doing. And I think maybe they're going to let the prices rise. And maybe this is why they're bringing it all home first. Get it all home, let the price go higher. And now you stop the ability of these countries to drain the world's exchanges, to stand for delivery the way that they are. It becomes a whole lot more difficult. So to me, Jesse, there's a whole lot that goes into this. There's a lot of moving parts. But if I had to be just plain and simple, it's the most undervalued asset on the planet. And it's the trade of a generation. I really do believe that. There are very few things I've ever seen that have asymmetrical qualities the way this does, meaning lowest downside, highest upside, and that's silver, 1,000% to me.
I want to pull on that thread you mentioned about the SLV ETF, that there are fewer shares available to borrow by quite a drastic quantity for the purposes of short selling, and that the fee to do so has also risen. Is that because so many people are short right now? It's a supply-demand issue, or is this a new policy enacted by the ETF? Why is that taking place?
Well, it's not a new policy. It's that there are a lot of players short. And look, the conventional reason for ETF outflows, so there's less shares, people are selling the ETFs or whatever, it would be interest rates, strong dollar, profit taking, et cetera. But what's happening suggests a much deeper shift. These large withdrawals, meaning there's less in the way of shares, to me indicate that big players are cashing out before a potential exposure to the scheme. Governments, central banks, wealthy elites, they're all removing physical gold and silver from the ETFs to consolidate control of the real assets, in my opinion, before whatever happens. And you can't be naked short without the ability to pay it back. You're dead. So they're all cashing out and they're getting out. And the big money has the ability to cash out and redeem it in gold or silver. It's the big commercial banks. They can redeem their shares and take the real physical metal. You know, the whole thing with SLV is that even during the silver squeeze in February 2021, BlackRock had to overnight change the prospectus and say, well, you know, because of the volatility, there may not be as much silver in the trust as there are shares outstanding. And that can present a big problem for short squeeze or for shorting this ETF is more or less what they said. It's a setup right now where the dummies who don't understand what's happening will find out exactly how dangerous being naked short something is. And the big money, they're front running this and they're getting out and they're taking their shares and redeeming them for the real silver. I don't think it's as mundane as profit taking or getting away from interest rates or whatever it may be. I think it's a whole lot deeper than that. And I think to be naked short right now in silver or gold, and in particular these ETFs, which don't have enough in the way of float to cover on the other side, is as dumb as a mud wall and in a rainstorm. And I think that will bear true if this trend continues. You know, again, I would just say, to me, I think that this rapid repatriation of gold and silver that we are seeing is suggesting a very big strategic shift. And I would not look past that, Jesse. I think what we are seeing right now is so far outside. You want to call it an outlier? It is so far outside of anything I've ever seen in my career. And the interesting thing about it is that the American retail public is completely asleep at the switch. The market is being driven by central banks right now, and the central banks are the ones that write the playbook. They are most well-informed traders in the world. And the American public is stuck in this NVIDIA, Bitcoin, Apple risk-on trade. I don't think we've even begun to see the fallout of what would happen if we see some sort of a market crash, because you have everyone in a handful of 7 stocks. You get everyone in Bitcoin. And yet the biggest money in the world is buying physical commodities hand over fist and repatriating them, taking possession. That it's not an inflation trade. It's a chaos trade. People are afraid. It's uncertainty. They're buying gold and silver and taking possession of it because something's coming. And they don't do those kinds of things at that level just for the hell of it. They don't reclassify gold as the only tier one asset in the world. They don't repatriate all their gold from the Bank of England and the New York Fed. They don't bring it all home to the COMEX. They don't do all of these things. You don't see JP Morgan now move to holding GLD and SLV if it were something bigger coming, in my opinion. I just simply think that this is being largely ignored by the American public. It is being hyper-driven by the most knowledgeable, well-funded, and well-informed traders on the planet. To me, there's a story that I think you and I will pick back up on here maybe in a few months, that we'll see gold and silver at levels that people are shocked by. And that's exactly how it works. You know, the big money always is positioned before the little guy even figures it out. And here we are at $3,000 gold and not a damn word from the media. People are sleeping at the switch. Rick Rule will tell you 0.5% allocation to precious metals from Joe and Jane Sixpack to the Harvard Endowment Fund. So as gold and silver, I mean, if you would have told me in my career, most of which when gold was under $400, I've been doing this for 35 years, that gold would be at $3,000 and the public is asleep at the switch.
If you found this information valuable, don't forget to hit that like button, subscribe, and turn on the notification bell so you never miss out on these crucial updates. The silver market is shifting fast. Stay ahead of the game.